Welcome, everyone. This is Mariusz Skonieczny, and we're going to talk about Voxtur today. I have Gary with me. Gary, I have seen a lot of crazy stuff over the 20 years of my investing career, but I have to say that what's happening, what I'm seeing with Voxtur stock right now, it has its own definition of craziness. It really does. It's almost like the sellers are acting as if they want to pay you to take the stock.
Is that a question? No, listen. I think that first and foremost, we have to keep on doing what we're doing. I mean, we just finished coming off a quarter. I know that the auditors asked us to transfer $3 million of revenue, defer it to the fourth quarter instead of what we had. If not for that, we would have grown our revenue by 3%. We have cut our cost of goods sold by 20%. We have increased our margins by 20%. We've been EBITDA positive and cash flow neutral. Now, in a market where you have everyone falling apart and 60% off, we killed it. And having said that, people tend to focus on the receivable of the A law firm of money that is owed to Voxtur. And as far as we're concerned, I mean, we made a pledge to deal with that whole receivable this month, and that will be done. And so we fully intend to be able to, if not delete all of that receivable, at least make all the receivable current, which is the most important thing. So this is a receivable that will be dealt with. And we're very much focused on that, and we have a solution to that, and we'll let that unfold over the next couple weeks.
When I looked at your quarterly numbers, the way they were, you were actually cash flow positive from the cash flow from operations. You were cash flow positive in the third quarter, and I was wondering, why didn't you guys come out and say in the headline of the press release, like, we were literally profitable on a cash flow basis?
Well, I mean, when everything is said and done, I mean, there's a lot of gymnastics, isn't there, as far as how people articulate what their performance is, in a specific quarter. I see many companies where they've lost $50 million and had impairment charges of $500 million. And the whole focus on the press release is this 10% segment of their business has increased by 15%. And that's the whole discussion. And, you could argue, are the people interested in truth? Are the people interested in actually, seeing the facts as they are presented and what we're required under law to provide? Or is it this just a game to be able to spin things? And probably, and I will say arguably, people think that we don't spin things enough and don't accentuate the positive enough. But all they have to do is talk to me. All they had to do was listen to our call. There's nothing that we're misrepresenting. We're disappointed that we had to defer the revenue because payments are being made, and we're being made with respect to, to decline the receivables. And we have a process in mind that will help, if not eliminate a good portion of it. So they'll take out any concerns or issues with respect to that. And the law firm has an opportunity to deal with that, and they are going to deal with it. And so we're very much confident that too will be an issue of the past.
And of course, the other issue is the covenants, and
Right.
and I realized that some investors are not aware of the fact that you actually healed your covenants issue. I don't think it's clear for people.
Well, I mean, what we said in our earnings call was that we had a waiver on our covenants, and that waiver will follow through right to the end of 2023. And what we did is we sat down with the bank, We outline the progress that we're making. We provided them with a go-forward position as far as what our revenues will be, what our profits will be, what the burn will be, etc. And they have supported us 100% in this endeavor. We put together an extremely conservative process where we haven't included a bunch of our what we expect to be wins in the latter half of this year, or sorry, the latter quarter of this year, as well as 2023. And so we feel very confident, because it's such an ultra conservative budget and the covenants are based on that our focus is on recording and ensuring that we do meet those big wins, and we far outreach the covenants that we're that we have negotiated successfully with BMO. They're very much confident in us. They've been extremely supportive of us, and and quite frankly, we have a lot of confidence in our business going forward. I ask you, name one business that's in the real estate fintech sector we're in. Name one that has actually had revenue growth, EBITDA growth, cut the cost of goods sold, and had margin increases in the same aspect or perspective of what we've done. I mean, we're unprecedented. I quite frankly, we're far outperforming what I thought we would in this type of market. You've seen our comparables. I don't certainly want to point anyone out right now, but you've seen that most of them have fallen off between 50 and 75%. Another important factor that people should note is that 20 months ago, or 21 months ago, or whatever it is, when Voxtur became present, even at the lowest point of where we're at right now, we've doubled our share price from 20 months ago. All right. Market value obviously has increased by 30 times, but we have acquisitions, so that certainly accounts for some of that growth. But our share price has doubled, and I'm talking about today's valuation at the lowest point. And when I look at our comparables that everyone is focused to, they have actually dropped their enterprise value and their market cap value by 90% and 95%. And we all know what the big four comps are. And so I'm just not going to elaborate on that, because I have respect for them, and I know that they'll be working hard too. And I hope they do well in the future, because it bodes well for everyone. But when people want to say, well, geez, how are you doing with your acquisitions? How are you doing, with your stock? How are you doing with your performance? Please show me an indicator other than people are misconstruing it. It just seems like, it's like mother duck and the baby ducks are following. And all of a sudden someone said, well, we've got this fault or we got that fault. And then these rumors start piling. And quite frankly, we're not in the rumor game. We're in the game of telling the truth. We're in the game of not trying to mislead, our investors. And, we're in the business of telling the truth and focusing on improving our business. And if anyone can say we haven't done that, then I challenge, tell us where we have faltered, right? And so, listen, this is a market of unprecedented times. It's the worst it's been in over 80 years. How do we continue to grow? How do we continue to grow our margins? How does that happen if what we said for you right from the start is that we are making our company data-centric, technology, provisions, and that's what we're implementing. Our business that we just completed with Blue Water, we're very confident with respect to the fourth quarter and beyond that it's going to meet or exceed our expectations. Love the business that Alpresci's in. We're in the midst of, incorporating some of the due diligence tools that we have right now, incorporating them with Al's due diligence trading platform, so that we can take a benefit and significant growth because of that. So we're really, really happy with where we're at. Our title business, believe it or not, which has been, our Achilles heel for the last 20 months, is coming around, and we expect it at the very least to be neutral, maybe not even a positive, but we're going to mitigate and eradicate the debt that we have been faced with that. We've done some drastic changes from an implementation standpoint, and we moved a lot of the FTEs and focus in on the technology offerings that we have. And we believe that that will bode well. And in the short term, are we going to have significant profits? No. But I think that everyone knows, and I'm not an economist, and I'm not the expert on projecting what things are going to happen. But I think that everybody knows that there is a full basket of defaults that are just waiting to come out in 2023. And we're certainly positioned for that. I mean, that's Jim Albertelli's title platform was focused around the defaults, and so that's going to be a big help for us. With defaults requires valuation, so that's going to be a big help for us. Again, concurrently, while that is happening, we pivoted and are participating in the secondary market where refis and originations have fallen off. We're now playing in the MSR space. We're playing in the HELOC space. We're playing in the scratch and dent and whole loans. So what we've been able to do is make sure that we have, from a cyclicality standpoint, have the ability to play in both primary and secondary markets. And we think that that is going to bode well for us. So while I, obviously respect our shareholders, and I, and somewhat, I'm extremely disappointed at the impact of what is happening with their stock, I think that what we're doing is the right thing. And we recognize, the board of directors recognize and acknowledges that the loans need to be paid off. Mr. Albertelli has pledged that these will be dealt with post haste, and quite frankly, because of that pledge, we're very confident that, and he has indicated to the board that he is going to be dealing with that this month. So when that goes, we think that hopefully, with the improvement of our business, that this will change, what we believe to be short term. Does the shareholders want us to go out and spend $400,000 or $500,000 on marketing and promotion when no one seems to be really having a significant interest in a less than buoyant stock market? We think that money is better spent just focusing on our business and growing it and giving us the tools that we need to excel in. And that's exactly where we've been focused at.
And what about, can you talk a little bit about your new products? Remember Voxtur Wealth, show me your assessment or check your assessment.
Yeah. Mm-hmm. Yeah. So, whoops, my apologies. Sorry, got a call there on the phone. So Voxtur Wealth is one of the businesses that we're putting a slow on, because quite frankly, it's all about making money right now and not spending it. And so that has tremendous capabilities and tremendous growth, but we can't, be spending money right now, unfortunately, in today's time, when we need to focus on profitability and focus on the areas that we have growth right now. I do have, a couple of material presentations on confirm your assessment and real property tax analytics. So we think it is going to be a big play in 2023. I mean, who doesn't need to know whether their assessments are too high and too low and by how much? So, we've got platform built already for that. And so we expect them to be offered in 2023. There's a lot of nuances in the US with respect to how taxes play. There's many states that have what we call basically a frozen assessment. So assessments are set when the property is sold, and then they don't get reassessed again until the property is sold again. So we've had to pivot with respect to how that presentation and how that determination of whether the taxes are fair or not. But quite frankly, as I said before, as a lender, it's all about risk mitigation. And so when they're lending against properties, they should have a pretty good idea as far as what the taxes are going to be as a result of a new acquisition. And so we've found an opportunity to be able to play in all aspects of that business. So again, we're excited. So real property tax analytics, confirm my assessment, is on the board and will be introduced in 2023. hopefully early 2023. I'm not saying mid to the latter part of the year. Real wealth will be introduced again in 2023, but we need these other businesses to succeed. We need, excuse me, to have cash flow positive and even a positive business, because that's our pledge to the bank. And so, you know, where it's like Christmas time and you got all these nice little, you know, presents that you want to unwrap. Some of them we have to hold back a bit, and make sure that we focus on, you know, what everyone is needed right now. And that is not so much growth in product offerings, but, you know, growth as far as profitability. It just seems, you know, the market has shifted significantly, and that's where we're going to be.
And in September 22nd, you closed on the Blue Water acquisition. So now it's been like, you know, full quarter almost. So what has been your experience with Blue Water?
Nothing short of excitement. And, you know, certainly Al Qureshi is probably one of the hardest workers I know. He's created a marketplace that is as unprecedented, you know, in the field of transactions and MSRs and non-QMs and excess trades, etc. And so he's done an extremely good job. We expect him to outperform, you know, in the fourth quarter as far as, you know, what we're looking at. And there's lots of product on the table, a little bit more challenging, you know, from time to time to find, you know, purchasers right now, because everyone is having this little pause moment saying, what's, you know, which way are the interest rates going? If things started to stabilize, are we okay to hop back in? Market's not going away. Banks need liquidity. So these trades are going to happen. And with Al creating his marketplace with a digitized process that he has developed, where we can do things in one day, where our competitors that are taking, you know, 20 times more people than what we have in 6 weeks, we're able to do it immediately. And so for our clients to be able to provide a proper hedging platform, to provide a trading platform, to provide an opportunity where we've created and participated in an order management system / brokerage, to be able to offer, you know, from A through Z, including due diligence, just is not happening anywhere. So we've really created a unique offering. Al is capitalizing on that unique offering, and, you know, we're going to have some really nice results in the fourth quarter. There's some big deals on the table, and, you know, we're confident that we're going to be there to be the people delivering on that. So we're increasing our client outreach. You know, we've signed a couple of fairly big clients recently. And again, this is kind of a funny business in that, as much as you'd like to say we've hired bank A, bank B, bank C, you know, the notoriety of our clients, they're not wanting us to publish. So we're relegated to saying major banks, major lending institutions, maybe MSR players in the industry. I think that, you know, we're the leaders in almost all of those categories as far as providing that service. So we're really happy with Blue Water.
Yeah. Okay. So, so I just want to, you know, thank you for doing this, and I wanted to tell you that, you know, I know it's tough. No, nobody wants to see their share price go down like it is, but, you know, you have my viewers' support. I mean, we're sticking with your business, and wanted to thank you for all the hard work that you're doing.
Well, I mean, you know it, and I know, but it's probably 10:15, you know, on a Monday night, and that seems to be our world today, whatever it takes. As you know, there's never once I'll fail to take a phone call, and hopefully, you know, I answer immediately. If not, I get back to you right away. We're working so hard because it's so important for us to deliver, and we're so, you know, upset that the stock has taken the path that it has. But we're also equally more focused than ever on our business. That's what's going to get us to where we want to go. Nuances happen, shifts happen, rumors happen, all of this kind of stuff happens. But, you know, if you can just read the financials, yes, I get the fact that it's a interrelated party receivable. We will take care of that this month. And then, you know, hopefully the focus will be, you know, getting back. please don't worry about the bank. The bank is working with us. We have a long-term relationship, long-term covenants. The way they had it before is they used to look at the last 12 months as a whole, and now basically the covenants are more current. So we're looking at each month and how we performed with respect to each quarter. And, we've delivered very conservative positions. We know that we're going to make those, and comply with those covenants. We're hoping this is the last time we have to talk about covenants. We're hoping that this is the start of, bottoming out of where our stock price is. And hopefully this has been some help to clear up any rumors that may exist. One thing we didn't talk about, Mariusz, was an attorney opinion letter. We have over 12 major institutions that have signed up and are going through the whole, we'll call it pilot projects to get them going. We've got another dozen fairly senior institutions have all indicated a desire to get on that platform. This is slow taking because it is a disruptor, and we have no way of having certainty where things are going to explode, whether it's January, February, March, or whether it's going to explode on the other side through Mr. Cressy on the capital market side. So what we do know that it's a great product that is substantively more affordable for lenders. We could get out there on the commercial side and start promoting in a more significant way with real estate agents and that. But ultimately, at the end of the day, the real estate agents, if they do promote it, and everyone should because it's more affordable, you do have to have the banks already signed up and agreed to it, right? So, bit by bit, we're going to get there. No one else has that kind of product. It doesn't exist. We have patent pending protection on it. We're working with the best AM1 best rated, insurance companies in the industry. And, Chris Mallon and Stacey Medier and that whole team are working their butts off to deliver that product. We have confidence in them. And, all good things happen to those who wait. We're all a bit impetuous with respect to getting the profits where we want, but we are delivering what we said. Guess what? We have Fannie approval. We have Freddie approval. We have the Federal Financing and Housing Authority approval. Just recently received the VA approval. This is a product to get that kind of support is real and it's here to stay for the long haul.
Well, it's interesting that you said that because I remember the day in April where AOL was approved by Fannie and Freddie, and that is what took the stock price to like $160.
Mm-hmm.
And I remember having a conversation with you, and you said we are such a better company today than we were at that time when it peaked and it had a market cap of 700 or 800 million.
Well, there's no question about that. When I look at where we are today with Blue Water and the anti-cyclicality of playing in the secondary markets, by having that company bring out the opportunity to offer our service offerings, which is, technology-related products and tax title evaluation. Where we are right now is as evidenced by the third quarter financial results, right? Cash flow, even a positive business and growing where everybody else is falling by 15, 60%. All of that is true. And listen, I'm always going to respect the investment community and their voices need to be heard. We need to be able to provide more regular updates. We need to provide a better and upgrade our communications so that we're more understood. We need to be able to hopefully eliminate a lot of these false rumors that are out there. The bank is supporting us. The debt will be taken care of. We're focusing on the business. Title is finally now coming around. So let's just get at it and do exactly what we're saying we're going to do. And hopefully, in the fullness of time, a lot of these, kind of rumors and concerns will be eradicated and we'll start making that slow climb to, fantastic, share price increases for our shareholders. That's what we're focusing on. We're not going to panic. You cannot take your eye off the prize, and that is growing your business. The rest will take care of itself. And we're not promoters. We're really not. We're not going to go out there and, and promise you things, that we can't deliver. And, we're a real company that have real, valuation growth and real profits. And that's saying a lot that most companies can't do today, in our space. So keep on fighting the fight, working hard, being true to our cause. And I think that we'll come out on the right side.
All right, Gary. Well, thank you very much for your time.
Okay, thank you. Bye-bye now.